Before I begin the video, I just want to flag, as always, that I am not a qualified financial advisor and nothing I say should be considered as financial advice. Hello, I'm the Juddy Saver and this is my August 2024 Stocks and Shares ISA update. So it's been quite a busy month for me away from YouTube. So I've been on a couple of holidays. I've been to Belgium and went to Brussels, Bruges and Ghent when I was there, and then I've been to London to see some theatre shows, and I've also been to Edinburgh to watch the Tattoo and also some fringe shows. So it's been quite busy, and my focus hasn't really been on my finances in August, apart from spending money, which was, is nice to do once in a while. So I'll go through what the figures were in August in my Stocks and Shares ISA. So the starting balance was £8,150. I've talked on this video series for a while now that my aim is to get my investments to be in from 4 figures to 5 figures, and I think that'll really be a milestone and maybe change how I think about my investments, because at the moment, while they are still below 10,000, it feels like a small amount, but as soon as I go over 10,000, it starts to feel a bit of a bigger amount in my head, and I think I'll see myself more as an investor. In terms of purchases and withdrawals, so I continued to buy kind of a small amount of investments this month. So as I've said on previous videos, my aim is to build my emergency fund, because a couple of years ago I didn't have a big enough emergency fund, and I had to actually sell some of my investments to pay for something in my property that needed fixing. So I don't want to make that mistake again. So alongside contributing to my Stocks and Shares ISA, I am contributing to an emergency fund, and that is going to be my focus until that emergency fund is at £6,000. So whilst I'm really eager to invest as much as I can, I've got to be balanced and realise that, I need to have easy access cash in case of emergencies. So that is why the purchase amount is a lot smaller than it was last year, where I was regularly purchasing £200 to £300 worth of investment each month. The income return, so this is what I get paid on any dividends that my funds pay. The dividends are paid, I always get confused between what it means if it's so every 3 months. It must get paid quarterly. So I got paid last month, so this month I didn't get paid. The income returns, those pennies, I think, are for any of the interest interest on the money that's in the cash part of my holdings. So you get kind of a small, I don't know what the figure is, but it's a small amount of interest on that cash figure. So that's where the 4p comes from. Then the market gain loss. So I started this financial year with I call it an unrealized loss, because I haven't sold the investment, so I haven't realized that loss. So the value went down by £159, but then I had a couple of months of the green, and then this month was down by £19. So the market is, went down, but really, if I think, and this percentage shows it, if I think about my investments as a whole, what proportion did they go down by? They pretty much remained flat. And then fees, I didn't have to pay any fees this month, and I pay the fees on a quarterly basis as well. And I think the fees are linked to my portfolio size. So for me, because I've got only a few £1,000 in my investments, it was only £3 that I had to pay last month. And then cumulative returns. So if I look at how much I've spent of my own money buying the investments compared with what they are now currently worth, I'm £1,446 up. So better off than I was if I hadn't invested. Now, what I'd say about this number is that it is unrealized. So it's based on the current value. So if I was to sell my investments today, I'd be £1,446 up. However, this does change over time, and my plan with compound interest is that the more I invest into the fund I invest in, and the longer I leave it sat in there, hopefully, after 10-20 years, this cumulative returns figure will be quite substantial. And that meant that the end balance is £8,157. So again, it's remained kind of quite similar to last month, because the £25 I purchased was offset by the £19 market loss. So in terms of overall figures, I've updated both of these figures now, so you can see that I'm trying to think what that adds up to. So I've been investing for 63 months now. 60% of the months I've seen a market gain, 40% of the months I've seen a loss, and you can see what that looks like on this chart here. So I think this really helps show, from my experience of investing in the stock market, how fluctuating the value of your long-term investments can be. So you can see I've seen a lot of positive months, but also a lot of negative months, and I really try and keep this sort of picture in mind when I do come up with a month where it is negative in value, when it's reducing in value. The other chart that I've just added for this month has been looking at my investment sort of value at month end over time. So you can see I started with £0, and then this is where I was regularly investing by £100 each month. So you can see it's quite a linear trajectory here, and I think most of you might think, why is it all just a straight line? Well, I was investing £100 a month, so I was quite consistent there, and because I didn't have any money invested, it took quite a lot of a while, given the scale of how much money I had invested, for any sort of interest to sort of take effect, I guess, in the value. So basically, all this it going up here is all through me contributing to the investments rather than any sort of investment returns. Then I got a bit excited here, so I thought, I've tested the water. I've invested for I think that was maybe about a year and a half, 2 years. So I started adding more and more, and I started thinking, actually, instead of £100 a month, I'm going to contribute £200 to £300 a month. But then this is a point where I learned a valuable lesson, and that was I reached £6,000 in investments, and I thought, wow, that's brilliant. I'm really making strides with this. But then I'd left myself with an emergency fund in my cash bank account of less than £1,000, and something came up with my property where I had to have something fixed which cost more than £1,000. So I ended up having to sell £1,800 worth of investment, and that impacted me in two ways. So the first way is, obviously, I was back to kind of this point here, which was several months ago since I'd had that value of £4,300. So there was that. So I physically kind of had to spend time building that up. But then also I really lost steam and lost motivation with it, because I had seen these investments as long term and me not touching them until many years in the future. And because I'd really kind of touched them, it's sort of maybe I became disillusioned a bit with it. So it took me a while to start regularly investing again. So that's why I talk about even if I'm contributing small sums, I still want to contribute something each month, because then it builds up that habit where each month I know I'm investing each month, whether it's £1, £10, or if in a good month £100, £200. So it's really just trying to build up the habit, because I think in terms of patterns of behavior, if I know each month that I'm an investor, that I invest each month, then I'll make the kind of money available to do that. yeah, so that is that for this month. As I said, £10,000 is still in my sights. I'd love it if I could get there by the end of this year. If I manage to complete building my emergency fund, if I could get this to £10,000, it would be great. But if not, then early next year. And then what I would like to do is, once my emergency fund is all kind of set aside and I'm happy with that level of money, then I can start really contributing a few £100 to these investments each month. So that's it for this video. If you've got any comments, then yeah, leave them in the comments box down below, and I'll see you on the next video.